Next one we're going to look at is whether South Africa is in big trouble. And as a South African investor, how can you hedge your risk and actually invest outside of South Africa? So the next one we're going to discuss is the DBX EU and the DBX Europe. Yes. So these are obviously two ETFs, and the underlying assets there are big listed stocks. So let's start with the DBX Europe, EU,
okay.
And maybe you can talk us through the underlying assets there.
So clearly all of Brexit really focuses on the UK and the EU and the relationship between the two. So when we look at an investment in the DBX tracker Euro Stoxx 50 ETF, there's the clue in the name. You are investing in the top 50 companies in the European region. But as a South African investor, you also exposed to Rand Euro exchange rate fluctuations. So these are really almost like two investment decisions in one, where you really got to say, what is my view on European stocks? And you do get them across the EU region. So it is your German stocks, your French, but also some of your more peripheral countries in terms of that. And then also, what is my view, not just on the Rand, but also on the euro relative maybe to some other currencies. So I think that's a particular ETF that this show has also had in its portfolio over the years. And I think for a long time there was a very strong investment premise for Europe. I think for all sorts of reasons, part of it being the rise of ISIS and terrorism and threat, and obviously the refugee crisis also that Europe has got. Those have already been two factors that have dragged really on that portfolio. But now we've got this massive implication of not just what will happen to the UK and under a condition of Brexit, but what is it going to do to Europe? And I think for me at this stage, I am a lot less hot on Europe than I've been for quite a while, because I think maybe as uncertain as we are about what's going to happen in the UK, the levels of uncertainty around Europe and how this is going to play out is significantly higher. And I think in the past we looked towards the ECB providing quantitative easing, really sort of fueling that European market, whereas now we are definitely going to see lower growth. We are going to see less of an ability of the ECB to really provide that quantitative easing. So I think it's going to be quite difficult for those European stocks to actually give us the sort of performance that we might have expected in the past.
But what about a situation where, a type of what doesn't kill you makes you stronger, and sort of Europe pulls together? I definitely feel that the UK will lose out on a lot of opportunities. I saw headlines yesterday suggesting that Goldman Sachs were looking to possibly move their headquarters. Because, I mean, if you have a bank in London, you had access to the whole of Europe. That might change. So other European countries and sort of major hubs and cities are going to start benefiting from that, because these guys aren't going to leave Europe, they're just going to move.
Yeah.
So this could be where the UK has lost Europe's gain.
I think UK's loss, Europe's gain is true, but who in Europe will gain? And I think you will see a lot more competition within Europe, a lot more infighting, because if Goldman Sachs or JP Morgan or any of the UK-based companies, financial services companies, move to Europe, where do they go? Do they go to Frankfurt? Do they go to Paris? Do they go to Belgium, Dublin? Where do they go? So I think when you have a situation like that within a group of countries and markets like the EU, the focus is much more internal, fighting each other rather than really positioning themselves as a solution as a whole. And for me, that is going to be a drag on European performance.
But when you say fight, it has negative connotations. It could be just, it's just competing.
Yes.
It's Dublin saying, listen, come here, Goldman Sachs, we'll give you tax breaks, we'll make your life a lot easier. And then Frankfurt, competing on that. And I guess at the end of the day, it's the businesses that were in a predicament having to leave that might be benefiting.
I think in the long term, you're absolutely right. For me, the medium term is the area of concern. It's a little bit like a company who's undergoing an acquisition strategy. You don't really want to be invested in the acquirer, because the focus of management is on actually bedding down this deal rather than on the fundamentals of the business. And I think many of your European stock markets and companies are going to find themselves in that position in the short to medium term.
Okay, so hot or not on the EU?
On EU, no, I'm not hot at this stage.
I'm going to agree with you. I do think I'm more inclined towards, if you want hard currency, towards US investments at this stage. DBX UK. So
right.
this is
so
obviously
this
the controversial
exactly,
one. Yeah.
Exactly. So if I were to contrast it, clearly that's the one that's been under the most pressure, not just post-Brexit, but also in the last couple of months, we've really seen UK under a lot of pressure. So when I now look at where we stand today, and I've got to contrast Europe to the UK, I'm much more positive on UK companies, and specifically here what I'm interested in is the currency. So for me, it's not so much about UK listed companies, FTSE 100 companies, but I do think the rand is going to depreciate more against the pound than it will against the euro, specifically because I think there's more strength coming in the pound, especially if they are putting in, sorry, I've got it the wrong way around. There's more weakness coming in the pound, strength in the rand relative to the pound. And what you will find there is that because of the quantitative easing that we'll probably see coming from the Bank of England, you'll see further weakness in the pound. So I don't think that particular side of the or component of the investment makes as much sense. And for me, I prefer the UK relative to Europe, but I hear what you say about the US, but you are buying it at quite high levels. But just between UK and Europe at this stage, I prefer the UK.
So you prefer the UK because you think, let me get this right, you think that the pound will depreciate and the underlying stocks will get a boost because they report in pounds but earn money elsewhere.
Yes, that amongst other things. But also I think you've almost got a contained fallout of Brexit there where they only have to worry about themselves. Whereas Europe, you've got a not contained fallout with lots more uncertainty, and that's why on a relative basis for me the UK is the better option at this stage.
So are you going to be hot or not?
So on the UK, if I've got to choose between the two, I'm going to be hot on the UK and not on the EU.
I'll disagree with you on this one.
Cool.
One of the main reasons is the commodities weighting in that UK index. I do like the healthcare element, but also quite a few banks in there, which I think are going to take heat, especially from a UK perspective. So I'm not going to be hot on the UK index.